Welcome back to the channel, traders and investors. Today, we're diving deep into a stock that's popped up on our hard-to-borrow screener with some truly eye-popping numbers, Global Interactive Technologies Inc., trading under the ticker GITS. We're going to dissect exactly what makes GITS hard to borrow, what that means for potential short squeeze dynamics, and what you need to be watching. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Click GITS logo/stock chart. Let's kick things off with a quick profile of GITS, Global Interactive Technologies Inc. This company operates in the communication services sector, specifically within internet content and information, with its core operations in South Korea. Through its subsidiary, GITS develops and operates Filings, a digital fan engagement platform designed to support online fan communities, content discovery, and user interaction. With a market capitalization of just $8.03 million, GITS is firmly in the microcap territory. Looking at recent price action, GITS has seen some positive momentum. Today alone, it's up plus 7.62%. Over the last 5 trading days, the stock has gained plus 5.61%, and looking at the past 30 days, GITS is up a solid plus 22.16%. Highlight price action, however, it's worth noting today's volume is only 162,000 shares, which is significantly below its 30-day average volume of 1,339,713 shares, giving us a relative volume of just 0.1x. What's cost to borrow and why it matters? So, what does it mean when a stock like GITS is hard to borrow? In simple terms, it means there's a high demand from short sellers to borrow shares, but very few shares are actually available. To short a stock, you first need to borrow shares from a broker, sell them, and then hopefully buy them back later at a low price to return them, pocketing the difference. But borrowing isn't free. Brokers charge a cost to borrow, or CTB fee, which is essentially an interest rate on the borrowed shares. When demand to short a stock is high and supply of borrowable shares is low, the CTB fee can skyrocket. These fees are annualized, so when you see numbers exceeding 100%, it means the cost to hold a short position for a full year would be more than the stock's current price. This can create immense pressure on short sellers. Why the stock is hard to borrow right now? Show CTB chart. And GITS Global Interactive Technologies Inc. is exhibiting some extreme hard to borrow characteristics right now. Our screeners have flagged an annualized cost to borrow fee for GITS an astonishing 932.3%. Highlight 932.3%, think about that, almost 1,000%. This isn't just a high fee, it's an indication of severe scarcity of shares available to short. Compounding this, we've seen a CTB momentum decline of 39 percentage points over the last 5 trading days, meaning the cost has dropped from even high levels, potentially as some short positions recovered or supply slightly eased, though it remains incredibly elevated. What's truly critical here is the current availability. There are only 10,000 shares currently available to borrow. Highlight 10,000 shares when you consider GITS has an estimated float of 2.4 million shares. 10,000 shares is a tiny fraction. This extremely limited supply, combined with the exorbitant fee, tells us that short sellers are paying a premium to maintain their bets against GITS. Squeeze mechanics explained. This brings us to the mechanics of a short squeeze. A short squeeze occurs when a stock's price starts to rise, typically due to positive news, strong buying pressure, or sometimes simply because the cost to borrow becomes unsustainable. As the price goes up, short sellers who profit from a falling stock start to lose money on their positions. The higher the price, the greater their losses. If they can't stomach the losses, or if the cost to borrow becomes too expensive to justify holding the position, they are forced to buy back shares in the open market to cover their shorts and close their positions. This forced buying creates even more buying pressure, which pushes the price even higher, triggering more short sellers to cover, and so on. It's a cascading effect that can send the stock soaring in a short period. For GITS, with such a tiny float and astronomical borrow fees, this dynamic could, theoretically, be explosive if triggered. Dilution risk check. Show no dilution filings. One crucial factor to consider when evaluating a potential short squeeze is dilution risk. Dilution happens when a company issues new shares, which increases the total number of shares outstanding and can depress the stock price, making it harder for a squeeze to take hold. New shares provide liquidity for short sellers to cover their positions without driving up the price as much. For GITS, our checks show no recent diluted SEC filings like S-1s, S-3s, or 424Bs found in the last 90 days. We also found no recent reverse splits in our lookback window. This is a positive sign for any short squeeze thesis, as it means the company isn't actively adding new shares that could be used to negate buying pressure. Important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. So, what should you be watching with GITS Global Interactive Technologies, Inc.? Our internal composite squeeze score for GITS currently sits at 42.5 out of 100. This score factors in things like the extreme CTB, the shrinking borrower supply, GITS' relatively small float, and recent price momentum. While the cost to borrow is incredibly high, remember that a high CTB does not guarantee a squeeze. It can also mean that short sellers have very strong conviction that GITS' stock price will fall further, and they are willing to pay a premium to stay short. Monitor the shares available to borrow. If that 10,000 number drops further, or if it suddenly increases dramatically, that's a signal. Also keep an eye on volume. As we noted, today's volume for GITS is significantly lower than its average, which could mean less interest or lower liquidity. A sustained increase in buying volume would be a key indicator for any squeeze potential. Global Interactive Technologies, Inc. GITS presents a fascinating case study with its near -1,000% cost to borrow fee and critically low share availability. While the conditions are ripe for potential volatility, always remember the risks involved, especially with micro-cap stocks. Keep a close watch on those borrow rates, available shares, and GITS' price and volume action. If you found this breakdown helpful, please hit that like button, subscribe for more in-depth stock analysis, and let us know in the comments what other stocks you'd like us to cover. We love hearing from you.